Hey, so what's up with Mitch? He's a federal contractor, learning his way around, knows how to get customers, knows how to get revenue. Every time he has to do a proposal, same topic comes up. What do we bid? How do we come up with that? For the longest time, he's used a spreadsheet a buddy gave him, and he's kind of been told, well, use a 1.5 or 1.7 multiplier. Take the pay rate times 1.7, and that's your bill rate. He's tired of flying by the seat of his pants. He wants to find a little bit more about indirect rates and make sure he's really covering his costs. Find out why he wins these times and why he loses that. Is he, where he is on competitive rates? He wants to know those things. So the question for Mitch is, which approach should he take? He's been using a do-it-yourself approach for a while. He does the research. He asks people. He kind of leans on friends, tries to understand it, but there's a lot of terminology: cost accounting standards, federal acquisition regulations, indirect rates. He's Googled it, but he usually doesn't find anything very specific, certainly not to what he's doing. He's been trying to teach himself government contracting and compliance, and there's not a good book for it. And nobody really wants to share the secrets. So he's just kind of going by hope. And he's also just really hoping that he'll never see an auditor. And if he stays small and does all fixed price, probably true. May stay small. So the other approach is done for you. Hire consultants. They build you an indirect rate spreadsheet. You use the rates it spits out and you hope it's right. Hasn't been changed in a while. Your company's grown. You're going after different lines of business. But you really don't want to have it updated again. It costs too much last time. And the other side of it is, if you ever had to justify those indirect rates, you'll use your spreadsheet. If that's not good enough, if they ask other questions, you'll call the consultants back in. Let them explain it. The other approach is the done with you approach. Learn the business model of government contracting, learn the math underneath that. Bid smarter because you understand it better, gives you more flexibility, lets you know what you're putting on the table. Use pricing leverage to win with more agencies and contracts. And by that, I mean really knowing what your costs are, knowing what your profit should be, and understanding when you could push a little bit in order to get that big contract that would take you up to the next level. And then last is understand your pricing well enough that you could explain it to anyone, anytime. Underneath all of this is business processes. What are your costs? What happens in your organization? What kind of reporting do you have? What do you know about your financial data? What's your cost? What's your profit? So the elements of all of that are really put through certain functional areas. So your data is only as good as each of those functional areas, how current it is, how accurate it is. Everybody's got human resources and payroll. Then you've got timesheets. How do people fill out their time? Is it accurate? Are they billing correctly to the jobs? The billing process, how complicated is it? What does it take? Who do you send it to? What's the approval processes? Then we start getting into the finer areas, the project management. How does your project manager decide where they are in the contract? How many hours have been used? What kind of cost to apply? What information do you share with your project manager about, I'm holding you responsible for this cost and I'm taking care of that? Are we competitive? Financial management, that's your profit and loss or income statement, your balance sheet, your accounts receivable aging, your accounts payable aging, maybe your revenue summary. How much profit are you making on each contract? You need to know that so you can grow and be watchful where things are starting to cost you more money than they should. And that's true from a cost competitive standpoint, an efficiency standpoint. How do you scale? And really the biggest piece of all of this is new business. What are you going after? What markets? Are you adding new business lines? Are you trying to break in with a new customer? Are you trying to package your services differently? Are you adding training? Are you adding products? All of those things affect your cost and therefore your pricing, and therefore your profit. So as far as DCAA, Defense Contract Audit Agency, indirect rates, the requirements that they spell out, these are 4 of them from a list of about 12 to 15 requirements. And I wanted to talk to you specifically about the ones that relate to indirect rates. The first one is proper segregation of direct cost from indirect cost. Well, what does that mean? Your direct costs are the costs that you are doing in performance of the contract. The travel that your people go on when they're requested by a customer to be on site at White Sands Missile Range. The labor of those employees while they're out there on site with the customer. Those are all direct costs, billable costs. Indirect cost, pretty much anything that's not billable, and that would be your indirect cost, your overhead cost, and generically we might call them fringe, overhead and G&A, where fringe is your payroll taxes, your leave, and your group benefits. Overhead is the support cost to your technical workforce, usually recruiting, certifications, training, things like that. And G&A, or general and administrative, is your corporate expenses. So according to DCAA, those are the buckets that you need to be identifying your cost in to be appropriate to be bidding on government contracts and to be able to pass their audit. Use general ledger accounts and controls. What that means is general ledger accounts are account numbers. There's a common accounting system numbering scheme that's used by most government contractors. For example, starts with a 5, it's usually cost of goods sold. 6, 7, and 8 is fringe, overhead, and G&A, some variation of that. 9s are usually unallowable as far as the account numbering. If you have something then different than that, you're not following the standards, you're going to confuse an auditor, they're going to think you don't know what you're doing, they're not going to cooperate when you want them to say what you need them to say so you can finish up the audit. General ledger accounts and controls also means that you've got a debit and credit system. So even though people will tell you you can do your accounting system in a spreadsheet, in my opinion, you can't because there aren't debits and credits. Consistent and logical indirect rates and allocations. That just means when you make these calculations year after year, quarter after quarter, you're using the math correctly and consistently. You're classifying this as overhead and this is G&A, and you're not swapping it around every couple of years. You have a method that somebody else can follow, a spreadsheet that makes sense. And you can prove the way that you allocated those costs to the contract. The last component of this is listed as adequate, reliable data for pricing follow-on acquisitions. Your indirect rates from the end of last fiscal year may be what you're required to use as you bid in the current fiscal year. Sometimes you can adjust those. Maybe you can show that you're using budgetary rates. Maybe you can say that we're considering the impact of this proposal that would cause our company to double in size and how it could make our G&A rate go down. Things like that could be part of it. But it's really becoming even more important in these days where we're doing a lot on GSA schedules with fixed billing rates, because if you bid it wrong in this year and next year you try to correct it and your rate increases by 20%, you might not get that approved. So you can't always make up for errors that they could be embedded for years, the way these work. So we're back to Mitch, and Mitch is just saying what he always says. I just want it all to work. So what does that mean for Mitch? Well, for him, it means we're competitive on price and we're delivering the best value. We know that our costs are covered. We aren't leaving money on the table. We can show enough profit, so we've got good cash flow. We can qualify for a decent line of credit. We're not going to be inhibited by our growth because we don't have the profit in it. We're minimizing our taxes while maximizing our valuation based on our succession strategy. Those are all the things that Mitch wants to work. And so indirect rates is pretty important to him. He's struggled with it long enough, it's time that he wants to work on it. So the approach to take could be, again, do it yourself, do the research, try to teach yourself government contracting, hope you never see an auditor. You could have it done for you, get an outside consultant, build you a spreadsheet, and keep using it year after year and wait to update it until things change a whole lot instead of having a way that you could update it as you go. The last one, though, We call it done with you. Learn the business model math of government contracting so you can bid smarter. Use pricing leverage to win with more agencies and markets. And lastly, understand your own pricing well enough so you could explain it to anyone, anytime. If that done with you approach sounds right to you, we'd love to talk to you. You could visit our website, www.solvability.com. That's SOLV as in Victor, ABILITY.com. We've got podcasts on there from our website. Or you can email me, jwclark@solvability.com. That's JWCLARK at Solvability, SOLV as in Victor, ABILITY.com. Or you can call me on my cell phone, 256-882-6276. Love to hear more about your goals, growth, and targets.